Good afternoon. Welcome back to another RASI podcast. This is Dave Downs. I'm sitting in here with one of our client advisors, Lynn Smith. Lynn, how are you today?
I am doing fantastic. How are you, Dave?
Awesome. I'm great. I'm not going on vacation tomorrow like you are, but I hope you have an awesome trip.
I know. Maybe I'll get a tan.
Yeah, after COVID, anytime you're getting on an airplane, it feels pretty darn good. So, I'm excited to be joined by Lynn today as we're talking through some steps to effective accounting for restaurants specifically, and we'll kind of sprinkle in how it may be different than some other industries. Lynn, I'm going to start with you right out of the gate. How many steps do you think really does it take to have effective restaurant accounting on a period basis?
Well, I mean, I think it definitely, can depend on the organization, but overall, I think it really breaks down into four critical things. Well, for the first one for me is really who's doing what, and it's really about defining the roles and responsibility of each person in the organization. Especially with our system, it all plays together, and everybody on the team has to do their part to make sure that we do have accuracy and timeliness in those financial statements in the first place. So I'd say that's definitely the first step.
Cool. Let's talk a little bit more about that. I love anytime you're in some sort of team sport, and I can't think of a better one than running restaurants is being able to utilize an entire team and depend on an entire team. Defining those roles and responsibilities really clearly is a major thing for any team or organization that's driving forward. You mentioned different types of restaurants may have different steps or different things that they do. How can we assist with clearly being able to define those roles and responsibilities for any one organization? I'm thinking kind of two different ends of the spectrum: a single owner operator type of restaurant, and then maybe a large group of restaurants, maybe different concepts in there too.
Right. I think that's important. And that's something that we always talk about in depth as we bring on new clients. What does your organization look like? One thing I'll say is one man shows are hard. They're hard in any aspect of the restaurant. You can't do it all. I mean, I remember having nightmares where I was making the drinks and making the food and waiting tables and sitting tables, and you wake up and you're sweating and you're just like, what the hell? So I think it's important to involve the team. I think a lot of owner operators are hesitant to let their staff see their financials, to let them be on the site, looking at the data and really interacting. And I think that that's the biggest mistake people make. The more accountability and the more visibility you can give to your staff, the more they're going to want to work for you. And the more that you can give them incentives within that data, bonus programs and things that can incentivize them to want to do their part. Again, the goal here is to get accurate and timely financials. So I think it takes looking at what makes sense. It doesn't make sense for someone who isn't going to count inventory to be accepting your invoices and entering your invoices. It just doesn't make sense. So it's really about understanding the role that each person plays and then how you can define that role and, again, figure out a way to structure it where there's benefit to them and giving them visibility into the restaurant that they're helping you run. I think that's a big a part of this.
Yeah, I love that. And one of the things that always kind of comes back to me is being able to even take something like inventory and invoicing and delegating that to multiple people,
Right.
but having a platform that you can really utilize and lean in on so that you can verify that what's going in is accurate. I think that's another key component of that, being able to define those roles and responsibilities. But they can also kind of help each other. That a bar manager should be relatively savvy enough on kitchen purchasing that if the kitchen is swamped, they can help get some of the invoices in for whatever reason. So I love that kind of team mentality and team approach. Let's shift gears a little bit now to a larger group, maybe 8 or 10 restaurants, and how those roles may be a little bit different. That maybe the management team isn't doing as much or everything in the system, and there is some other different types of oversight. What kinds of things do you see, or would you recommend in being able to kind of coach a larger restaurant group into clearly defining what roles people are doing in their organization?
Right. I think, dealing with bigger groups, multi-concept groups, a big part of that, yes, you're still going to delegate, but a lot of times you're going to find that there's another level of audit. There's another level of, okay, who has the final eyes on this? And that could be a director of operations, that could be a
Mm.
controller. And so when we bring those people to the party, their main job is to make sure that, not only to hold everybody accountable for maybe the lower level tasks that they might be doing, but they're having those eyes on it before we actually send it in and say, this is it. We've got all of our invoices, our sales are correct, the payroll's accurate. So I do think that with bigger organizations, because there is so much to manage, it's not always a bad idea to have someone who actually does the last step of approval. That way they can always catch mistakes. They can make adjustments before everything is sent through and hits those financial statements. And I recommend that to bigger groups, because there is a lot more to manage, and you also need that extra layer of accountability. If you have managers and they're just doing payroll and they're just getting their invoices to you, well, we still need to make sure that they're doing that on time. They're getting, they're ready with their duties when you need to go in and approve. And all that comes into play, to get that financial on time, and then to make sure you're not going back with 10 units and trying to make corrections here and there, because that's not beneficial for anyone, of course.
No doubt. And then also, I think kind of a secondary purpose or a secondary goal that may be met there is director of operations. Their main job is to teach and develop and to coach their
Yeah.
management teams into running their operations as effectively and efficiently as possible. So if there are mistakes that are recurring that are coming through their information, that's a way for them to identify those managers that need a little additional coaching and education. That way, it's great. It's perfect, perfectly set up for that. So cool. Moving on kind of to the second step that you have, second of four, what do you identify as the next main step? We've got the roles and responsibilities clearly defined. What do we do now?
I think that does kind of tie into what we just mentioned. When are we doing this stuff? Okay, now we know this is your job, this is your job, this is your job. We understand the why, right? We know why we're asking these tasks of our staff. But when are we doing this? We have a couple different work weeks that we offer here at RASI, and we do clearly define when each of those tasks should be done so that you can get that weekly financial. I think, now more than ever, just with the way the world's been, and, different loans and funds that want this data right away, it has to be accurate. And again, I think that all of this is going to tie together, but I think a big part of that is having deadlines. If you have a Monday through Sunday work week, the expectation should be that that's getting done on Monday, because what that allows you to do is, by Tuesday, Wednesday, you're looking at a full P&L. You're able to make those quick decisions and to understand your accounting, right, on a more frequent basis. I think, we're going to probably chat about this here in a minute, but what financial statements are you looking at, and at what frequency? And I think that all ties in together with, if we have a manager who they haven't done their accounts payable for the week, well, we're going to be hung up waiting for that. Or we know that our financial statement's not going to be accurate until they do their part. So I think that's a big play in it as well, catching those mistakes, and really, again, accountability on each person's role.
Kind of stepping into that. So the second step there is really timeliness and accuracy, as you described it, is making sure that the management team or the roles, the key players know what they should be doing and when they should be doing it. What kinds of things are they doing? It seems like it could be relatively complex, but what information are they really teeing up or submitting on a weekly basis to get those financials in the right spot?
Yeah, I mean, in my mind, pay your people, pay your vendors, pay your taxes, count your stuff, right? I mean, that's really, when you think about it, it's a great way to look at any type of accounting. But I think, with that being said, of course, you have payroll. That's a given. That's going to give you all your labor costs and everything like that. Now, some of the tasks are going to be done throughout the week, right? We want to be capturing our purchases all throughout the week. One thing that we do offer is the ability to use our budget tool as a declining spending throughout the week. And so when we're putting these invoices and these purchases in on the day they happen, or at least throughout the week, we're actually able to track that and really watch our spending in real time. And I think that's insanely valuable. So accounts payable is a big part of that. Did we capture all of our purchases? Inventory, of course, that's something that we're going to want to count. without inventory, it's hard to get accurate, and it's really hard to track waste and theft and things of that nature, right? You can't see that. You don't have that visibility. So that's another part that kind of plays into the whole thing here. The other thing that we're tracking is sales. What were your discounts like that day?
Hmm.
What was what did you sell? What are your cash deposits for the week? What kind of bank activity are we going to see? So I think it does all tie together, but those are some of the main things that the team members would be responsible for collectively.
It's perfect, and they have their hands in all of that, and trying to, as you said, utilize that information throughout the course of the week in a timely and accurate way, so that we can avoid any crazy unknowns that hit the P&L come the end of the week. We're really able to look at that and say, okay, this is what last week's results were. This is what we are trying to make improvements on. Well, let's go fix it as a team, and again, bringing in kind of that team sport mentality. I love it. Step three, now we're kind of reviewing some stuff. What kinds of things and with what frequency are you coaching clients and restaurateurs into reviewing and monitoring on a regular basis?
Yeah, I mean, I think the obvious one is the profit and loss statement, right? I
Hmm.
mean, that's something that as an operator, you should be looking at as frequently as possible. With us, that is posted once a week, only once everything is sent. So,
Yeah.
once we've got payroll, AP inventory, and sales in, that's when we have all the things that we need to produce a P&L. But that should be looked at weekly. Um, where I think things start to fall off a bit for a lot of people is the balance sheet.
Mm.
A lot of people kind of say, oh, it's not that important right now. Oh, my CPA will deal with it. But it is, right? This is where we're looking at, are you over collecting credit card tips? Are you holding money from your staff? I mean, how does that translate? We're looking at things like gift cards. What's your gift card liability? How much money is out there? Things that once they're out of balance can be really tricky to correct. That's where your credit card balances live. All of your liabilities and your assets are on your balance sheet. And I think that a lot of people make the mistake of kind of writing that off as a report that doesn't need to be looked at as frequently. And I agree with that, right? I mean, you don't need to be doing a deep dive into your balance sheet twice a week, every week, even. But I think, again, just from an accounting standpoint, thinking about your periods. We are on a 13 4-week period calendar here at RASI. For the most part, we offer a couple different cycles. But my point is that at the close of each period, that should be your cue to say, let's look at this. Let's make sure that we're not ending up with a bunch of things that are missed. Let's make sure that we're auditing those balances so we're not having to do cleanup. Save your CPA the headache and just take a look and try to stay on top of those things. And again, they do have a big impact. And sometimes that can tie in together as well. Are we doing something within the system or within our own accounting or our own role in the organization that's affecting those balances? Are we, recording expenses incorrectly? Are we putting things on the balance sheet that shouldn't go there? We see that all the time. And I think, that all ties together and then also plays into cash flow, which is a bigger conversation. But
It's really interesting. I know as a former operator and even in an ownership role, I didn't check out the balance sheet quite as much as I probably should have. At the time, I think we were asset purchasing keg deposits and offsetting to that GL,
right.
which was something I never really looked at. And then it would have this really weird balance in there from time to time, and goofy things. I know a lot of owners also approach the balance sheet to say, well, my operators, my management team has no impact on any of the stuff there. And that's a fallacy. That's an easy trap to fall into, guilty as charged in a past life. What other kinds of things on the balance sheet can management teams really impact, whether they know it or not?
Oh yeah. I think I touched on a couple of them, um, but the big one that we look at, the big three, I guess I could say that I really
Sure.
like to focus on with my clients is credit cards. Credit card tips, payable. And that's so important because every penny that you take in a credit card tip, that's your staff's money. So either way, it gets out of whack. Either you're spending your own money to pay them tips or you're keeping their money. Either way, it's not a good look. that's directly impacted by what's happening when we're recording those sales and those credit card tips daily. And it's also happening based on what's being paid out on payroll. That could be two different people responsible for those
Sure.
tasks. So are they auditing each other's work? And are they looking at that balance to say, hey man, you put more on payroll than what we took in? And it's fixable, right? But it's just one of those that we want to make sure we're not keeping money that belongs to your staff, or vice versa, right? I mean, with the times right now, let's not be overpaying staff either. So that's a big one. House bank. How much money is sitting in that restaurant? This is one that gets out of whack very easily. It doesn't seem like it would be that complicated, but we have to think that every day we're handling cash and we're interacting with cash inside the restaurant, whether it's in a safe, whether it's in a till, whether we're doing paid outs from the cash drawer, whether maybe we're not putting our credit card tips on checks and we're paying cash out of the restaurant. That's very common as well. Are we recording that correctly? How much money is actually sitting in there? And that's one that gets, like I said, it gets messed up pretty quickly. And I'm saying, do you have $60,000 sitting in that restaurant? Well, no. Okay, well, let's figure out what happened. So, that's another one that it all kind of ties together with how things are being recorded, both from the point of sale and on a daily basis, and your bank deposits that can affect that GL as well. The other one is credit cards. Let's say that the stores have access to a credit card to make miscellaneous purchases. Who's managing that? Right? This is something, it's a liability that directly affects your cash flow. And I think it's really important to understand who's making purchases on those credit cards, who's paying them down and recording that part of it, and really making sure that those balances that are sitting there are actually what you owe. I think that's another one that's very easily messed up.
Yeah, those are three fantastic ones, and you're exactly right. The operators have direct impact on all of those things. Cash handling is the top of the balance sheet. How much cash you have on hand is something that almost should be done every single week, although you may not do a full balance sheet review weekly or even multiple times per week, like you mentioned. But auditing and being able to really understand the accountability side of what the management team can do and can impact in the restaurant, even though we do trust them to do their jobs and to do it effectively. Let's kind of shift gears a little bit here and go down to the fourth step in terms of the frequency of reviews. I know it seems like anymore with third party apps, with point of sale stuff, we can get completely inundated in data. And to avoid that paralysis that comes along with all of the information at our fingertips, what are some key kind of points or times throughout the week, throughout the period, throughout the year that you recommend doing some of these reviews? And what kinds of statements are folks looking at so that we can help tie this all together and simplify as much as we can how often they're spending diving into the data?
Yeah, I think, again, the P&L is a big one. That's going to tell you how you're performing. And when we talk about the frequency of looking at any report, you have to think, am I going to remember what happened 2 months ago? If I'm looking back at something, am I going to know, oh, right, we had that party deposit and they gave us cash and we forgot to? No, that's the answer, especially
Yeah.
if you weren't in there doing it. And I think, tying it back to the accuracy is, looking at the ones that immediately affect your operations on a weekly basis. You could even bring in a sales and labor analysis report. How are you using that throughout the week, and how is that ultimately going to affect your P&L? You can, obviously, with labor being such a concern, that's something that you could be looking at almost on a daily basis and forecasting and scheduling appropriately. Some of the other reports, like I mentioned, the balance sheet, I think that people tend to struggle to adjust to the 13 period schedule. People think in calendar months. It's completely normal. But I think if you can focus on following that period schedule and closing your period, right, then you have that note in your head. Okay, we have a period closing here next week. Let's take a look. That's when we're pulling up the balance sheet. That's when you
Mhm.
could even look at the cash flow statement. What is the cash flow statement telling us about what we can expect, because that's also going to affect things throughout the year. Are you selling a bunch of gift cards at one point in the year? Are you a seasonal business? Um, so overall, I think those are going to be the general frequency. There's a million reports, right? We could go into, I mean, I could list off a bunch of reports that you can use, but I think it's about drilling down and auditing and, understanding if there are mistakes being made by your team and how we can correct those, or make entries before we close the period. So we're not having to go back and reconcile the bank account to get expenses recorded. We're not having to, again, go back and try to remember what happened a month ago. I think just having that period calendar in mind and closing it out is a good way to get ahead of
I got to ask for one quick story because I love stories. We're a quarter into 2021, but let's take us back a few months. We'll go to the end of 2020, which for all intents and purposes was a really interesting year, so to speak. Give me a story of somebody that you worked with in towards the end of the year that maybe let some things spiral out of control,
that.
and what kinds of things can we do to help coach them to clean things up come year end?
Yeah, I mean, you know, oh man, there are a lot of stories. I think, what happened last year was something else. I mean, a lot of people they were scared, they were unsure of the future, so they kind of just went like this. I don't know, I don't have staff, I'm cooking, I don't know, I don't have time for this, right? Then we get towards year end and it's, well shoot, I got to close out my year. Okay, well you're months behind on sales. And there's no looking at financials at that point. It's kind of fight or flight. That being said, the irony of it all is that those financial statements were probably more valuable last year than they'll ever be again. Like I said earlier, we've got PPP, we've got the restaurant revitalization fund that's happening. So there was a lot going on. Again, I think one of the biggest things and a trend that I think we saw as an organization was the involvement of service charges. And this does tie into, of course, both house bank and credit card tips payable, like we mentioned. But when COVID happened, a lot of restaurants said, we're putting 20% on everybody's check, right? In theory, that's great because we needed to keep staff. We had to make sure that we were going to take in enough money to be able to pay people. Totally understand the thought process on it. However, those are treated completely different from tips. And I think
Yeah.
a lot of operators lacked that knowledge when they made those decisions. And this wasn't just one particular restaurant. This was a very sweeping decision and kind of a trend that we saw. So with that, we had restaurants that were paying service charges out in cash that day with the rest of the tips, but not recording it that way. So then what do we see? We see a major overpayment in that credit card GL because it's saying, hey, you're paying out a ton of money that we didn't see come in as a tip. But then they've got this overstated income on their profit and loss statement because they are saying that they brought in all these service charges.
Right.
Service charges have to be paid out on payroll and they have to be paid out and recorded separately from tips. So I think, like I said, there was many things that we saw, but I think that was a big one. And because people didn't know, right? They're like, well, the money's for my staff. It's for my staff. It is, but if you're forcing that upon the guests in any way, shape, or form, it's actually considered income to the restaurant, and it's not a voluntary tip to your staff. Now, you can pay it out, but it was the way that they were choosing to do that where we really started to see that get wonky.
Interesting, and I know probably a lot of scrambling to clean up a lot of books at the end of the year, and probably some long days in having those conversations with clients.
Yeah.
But it's always good to approach things as we do in that training and education type of way, being able to coach and say, listen, this is how because of the federal law, this is how these things have to be accounted for and handled. That's fantastic, Lynn. I can't thank you enough for your time, and even more so for your 4 easy steps to effective restaurant accounting. And I'll recap those here real quick. First and foremost, clearly defining roles and responsibilities for the team. Second step is timeliness and accurate submittals for the big 4: payroll, accounts payable, inventory, and sales. The third step is auditing for accountability, ensuring that things aren't spiraling out of control. And then the fourth one is really the frequency with which you look at some of these things. Don't wait until the end of the year to check out that balance sheet for the first time in the calendar. Do that with frequency. So, Lynn, any other final thoughts from you today? Otherwise, I cannot thank you enough.
Yeah, absolutely. I think we covered it all. Thanks so much, Dave.
Cool. Thanks for your time. Have a great vacation down in Florida and enjoy the warm weather. It's still snowy and rainy here.
I know, right? Awesome. Thanks, Dave.
All right. Cheers, Lynn.